Well, thank you. I'm Darwin Green, Vice President Exploration for Constantine Metal Resources. So we're really two stories in one. The company's founded and based on a base metal project that we discovered, copper zinc asset in Alaska, that's kind of hit critical size, and we're just in the process of completing a PEA. But in addition to that, we've got a really nice portfolio of gold assets, quality gold projects, and actually just today we announced our plans formally to spin out those gold assets into a new company. It's going to be called High Gold Mining, and it's an opportunity to create some value for our shareholders by unlocking that value of those gold assets and allowing both companies to focus on their assets independently. A little bit about the company here, a little bit of a backstory where we've got a tight share structure with just 45 million shares outstanding, a technical team that's very strong, our management team that's very strong technically. We've got cash in the bank, and we've got endorsement at the project level with a joint venture with Dowa Metals and Mining. They're Japan's largest zinc smelting company. And on the equity level, we've got, it's got a mind of its own here, a good roster of quality shareholders. So talk a bit about Palmer. This presentation structured with, I'm going to talk about the base metal asset on the front end and the gold assets on the back end. We had a core, I guess our main deposit. It's reached critical mass. We launched a PEA on that in late 2018, and we'll have those results out here any day now. But it's a project that hosts multiple deposits. We found a second deposit already, came out with a resource on that in the end of 2018, and we see opportunity for several more to be found. Other key aspect, we are in Alaska, we're looking down on a highway, and we're 40 miles to a deep sea port. So fantastic infrastructure. Where we are exactly in Alaska, we're at the north end of the Alaska Panhandle, in an area with a couple of producing mines, Kensington Gold Mine and the Greens Creek Mine, two of Alaska's 6 producers. And as far as the type of deposit we are as VMS, these things occur in clusters, and we're in one of the better belts globally, in our opinion. So a little bit about our partner, Dowa Metals and Mining. They entered the project in 2013 through an option agreement where they spent US $22 million to earn 49%. They now have gained that 49%, and it's a joint venture whereby Constantine is operator and a 51% owner. They're great partners. They know these deposits well. They've been mining them for years. We like the ability to share the financial risk with them. We like their expertise in VMS, and we also like the fact that we've got a guaranteed buyer for our zinc concentrates. So very motivated to get the project to production. The last year or so has been very productive for us. We entered 2018 with an 8 million ton resource base. We exited 2018 with a resource base totaling 14 million tons. That includes an expansion of the main deposit from 8 million to 10 million tons, as well as a maiden resource on the AG zone, which is a new discovery made at a little better than 4 million tons. We did a fair bit of metallurgical work and other studies that have all kind of coalesced into the launch of a PEA. That started late 2018. As I say, that's due out here imminently. Just a little bit about that resource. It's polymetallic. It's really driven by zinc and copper as the primary commodities with good precious metals credits. Bit unusual in that we have an industrial commodity as a byproduct in barite. I guess the key numbers to look at here are the zinc and copper equivalents, sort of in the 9 to 10% range, the zinc equivalent, 3.5 to 4% range in the copper equivalent. Those equivalents don't account for the barite. The barite's additive. So a nice high-grade system. 10 million tons was sort of our internal threshold before launching an economic study. We're now at 14, and so we're looking forward to see those results. So, as a project, in terms of grade profile and size profile, it's the type of stuff that's been mined historically for many decades elsewhere. Then the big question is, what are your operating costs going to be? And we believe our operating costs are going to be at the low end of the spectrum. There's several reasons for that. Our zones are thick and wide. Everything's amenable to long hole stope mining. There's lateral access. You can mine from the bottom up. It's an unusual deposit due to the topography in Alaska and where we are. You can actually do lateral development, access the bottom of the deposit, and then mine your way up and have an ore pass. So our PEA is going to look at an underground crusher and conveyor to conveyor it to surface. And obviously that proximity to port is huge. Just 40 miles from the mine site to existing deep tide water. So all of these things add up to what we believe is going to be a very commanding PEA. We'll have a strong valuation for the project. One of the areas we think this project is going to stand above many of our peers is its operating margin. We anticipate very low operating costs, very healthy NSR value per ton. That should lead to a very nice operating margin and low cash costs. This, between, I guess, these results allow us to have a re-rate opportunity to really finally establish value for what the project's worth and what a mine plan will look like. And what differentiates us from many of our peers, in our opinion, in terms of development stage projects. We're not remote, we're not third world, it'll be a manageable CapEx, and we have a very motivated partner in Doha. And there's also tremendous exploration upside. We're also very proud of the fact that this PEA is going to be a very environmentally sound mine design. That's both due to the natural geologic attributes of the project and due to very deliberate progressive design elements. And so we're very keen to get that out and show what a neat mine this will be. Looking to district potential, we look at the Hokuroku district in Japan, opportunity to just keep finding more deposits. I won't spend too much time on this given the limited time I have here, but very good model. We've been at this for a while in terms of once you find one deposit, there's a good chance you will find more. There's at least a dozen mines developed in the Hokuroku district that collectively added up to 140 million tons. We see that same opportunity here at the Palmer project. Last half here, for the last few minutes here, I'll just talk about High Gold. So today's news release was announcing our spin-out plans. We finally formalized the lease agreement for the Johnson Tract project in Alaska. It's another project in Alaska, tremendously high grade with some spectacular historic results, 70 meters of 20 grams gold with 5% zinc, 100 meters of 10 grams gold with 8% zinc. Very unique and unusual deposit, a little bit like somewhere between a hybrid between an SK Creek or a Hod Maden type system where you get base metals and the gold together. It's been off the market for 25 years. It was advanced to sort of a pre-feasibility stage by a past mid-tier producer. It was all pre-43-101. We're going to pick up where they left off. It's had nothing done on it for 25 years. It's right in our wheelhouse in terms of types of projects we know. The other assets are in Ontario. We've had a long history there. And again, grade is what defines us. So High Gold, the name comes from the fact that we're going to be exploring for high-grade projects in North America. Just a cross-section of that Johnson Tract project, just an idea of where some of those drill intersections come from. Really good continuity, really good width, and just spectacular grade. The bottom of the deposit's offset by a fault. There's some big work done that's suggested where that offset has gone. That's going to be our first target to go after. Quite excited about this one. Beyond that, there's several other prospects scattered across about 12, 13 kilometer strike length. Real opportunity here to develop a real sort of multi-million ounce, multi-deposit district, and that will be our focus. Quickly, looking at Ontario, it's a historic producer of tremendous amount of gold in Canada. In the Timmins camp is where our assets are. The crown jewel is the Munro Croesus. It was a former past producer from the early 1900s to about 1930. And a couple other very large land packages in that camp that we're quite excited to finally get after. They've been sort of, I guess, underexplored by us for the last number of years, and due to our energy spent on our base metal project, so they're finally going to get their opportunity. And it really is an exceptional opportunity. We're talking gold in the percents in some cases here. Really good analog for our Croesus project is the Beta Hunt mine in Australia, RNC, very unique, specific structural and stratigraphic setting within which that mineralization occurs. We've got a great model. We think we can find more of this. So that's about it, just to summarize. So really 2 stories in one. Both, I think, going to be great, great company making kind of projects. Palmer's well on its way. With the PEA, it's gonna lay the framework and I guess schedule and roadmap out to drive this project towards a hopefully feasibility and mine development decision. And then the gold project's a fantastic portfolio of assets for a new company. Thank you very much.